now is that home prices are finally coming down a little bit.
Yes, we're thinking about buying a home.
Well, I would think long and hard. I know I'm not giving financial advice here, but I am giving people things to think about. Now, this we can, and again, let's look at this from the perspective of Austrian economists. Whereas Austrian economists, again, we are interested in empirical data, but what we are more interested in is understanding long-term trends so we can extrapolate and see where things are going, kind of predict the future, so to say. Now, in 1990, or like in the very early 1990s, the RBA, the Reserve Bank of Australia, the interest rate was 17.5%. 17.5. Right now, it's 1.85. And people are thinking, oh my God, it's so high, because it hasn't been this high for several years. And I think in a few days, and I think in a few days, I think they're going to raise the interest rates again in Australia, because they raised it, I think, 3 times in a row, like about 0.5%. And many people are saying, well, you know, they can't continue raising this 0.5% each time. If they get to 3 or 4 or 5%, you know, it could cause a crash, and it probably will. But just think, 30 years ago, it was 17.5. So for about 30 years, there was like an oscillating trend of raising and lowering, and for 2 years it was basically zero, and now in the last several months they're raising it, supposedly to fight what they call inflation, but it's not really inflation. It's the rate of prices going up, which they say is 6.1%, but everybody knows it's not 6.1. It's probably double that, right?
Yeah,
it's not double. It's not 6.1. So but what is happening is that finally, after 30 years of Australians thinking, oh, homes are always going to go up price, that's just what they do, because they did for over a generation. So now I think prices are going down in Sydney, prices are going down in other places, maybe 1 or 2%, but I would tell people, do you think that it's going to stop here? Because if we're just at the beginning stages, one more sentence, if we're just at the beginning stages of a housing crash, then maybe it's a good idea to wait. Maybe. I'm not telling people what to do.
Please, can I?
Sure.
Because I made the research, so I know.
Okay.
Yeah. So what's happening right now is the interest levels going up, and slowly, really slowly, bit by bit, people are starting to sell. But it's a very slow process because they don't want to get rid of their assets. Okay, because they know that they think that in the long run, it's gonna go back to be normal.
Long run is 100 years.
Like no, they think like very closely. It's gonna be it's the housing, like it's just the prices are gonna go back up again.
Yeah,
and you're gonna have another bubble again.
I wouldn't bet on that.
I have checked the interest rates, and I know they're going up.
Oh yeah.
And I know. I also checked what's going to happen.
How much on average now? Like 6. I'm half guessing here, about 6-7% mortgage rate.
I'm not sure at this
in Australia right now.
I checked 2 weeks ago, and it was around 4, 3-4. But I'm not sure.
I'm guessing that it's more, but
probably that.
Yeah. I mean, I know that mortgage rates in the United States have pretty much doubled. So I would be surprised if they haven't in Australia. And in some ways, the housing market is even more dangerous in Australia, because most people in the United States, they have fixed rate mortgage. Okay, most people in Australia, I think at least 60%, they have variable rates, which means that they can say, oh, well, prices, mortgage interest rates have gone up. We better buy now before they go up even more. But yeah, if they go up even more, things that people are not going to be able to afford their mortgage payments.
So we did a calculation. Yeah, so we did a calculation what's going to happen to the mortgage payment, even if it goes up to the extreme point of 17 or 20%, which was the highest according to 30 years ago, and we found out that we can take it, we can do it. So that's very important to do that. Yes, I know, a lot of, but yeah, so we can do it. That's why we're thinking about getting it. That's why I thought about getting it, because basically because we can take it.
But let me ask you this. Let me ask you this.
Yeah.
If you think that rates are going to go up that high, what is that going to do to the price of the house?
I don't know, like rates. I don't know if we don't know if the rates are probably going to go very high.
Okay. Well, what my question is, what will that do to the price of the house?
Well, it's gonna decrease the value probably.
Yeah, by a little or by a lot?
By the same percentage.
Well, I don't know, but
I'm not sure. It depends how many people have mortgage.
It's an educated guess. Yeah, it's an educated guess. Nobody can calculate exactly, but let's say it's a pretty good guess that if rates go up much higher than they are now, then prices are not going to go down just by a little bit. They're going to go down drastically. So one should ask himself, why would I buy a house at today's prices if maybe you can buy it not so far in the future? I don't know, maybe months, maybe a year or two at much lower prices. Again, nobody knows the exact future, but I think it's a safe bet that interest rates are going higher.
From a research with a couple of months, the housing price is going lower.
Yeah,
is going lower, like with tens of thousands lower. But so maybe we're not going to go right away to get a house. We might wait a bit more, but we're seeing what's going on. Okay.
There's a saying. There's an economic. There's an investment saying: buy when there's blood in the streets.
Yeah, that's the worst. You buy it in the worst, and you sell it when it's best.
You buy it when everybody is so desperate to sell that they'll say, please just take my house. I need something to.
I need a little bit of food.
Yeah.
Or in Australia, I just need to buy another van to just travel around till I die.
Oh, wow.
That's the common thing. And it's not a bad thing, by the way. It's very sweet. But yeah, we'll take care of it later. Okay, so let's just